Good afternoon. Today is Friday, September the 15th. The time right now is 1:09 in the afternoon. And overnight, we can see that all asset classes have a big move yesterday night. And we can see US equity markets has been rallying higher on the back of a retail sales as well as a hotter than expected inflation numbers coming from the producer price index. Now we have the producer price index actually doubling from 0.8% to 1.6% year on year. So this is actually quite a big bump up on top of this. Earlier in the week, we can see the CPI numbers has also been rising. So we can see inflation is definitely coming back in a big way. And this rate raised the possibility of further rate hikes going forward. However, the market is already convinced itself that the Fed is likely to only have one more rate hike towards the end of the year and nothing more beyond that. So that gives them the green light to actually go back into risky assets, in my opinion. And this is what is happening right now. And in the Dow Jones industrial average, you can see the micro E-mini futures is currently trading at 35,343 in electronic trading session as we are speaking right now. And this is en route to the target price of 35,426 to 35,687, with the possibility that it can even go higher to 35,531 to 35,844 in the price chart here, as you can see. However, I have to add, we just have confirmation that the United Auto Workers, the union that controls Chicago automakers union workers, has actually declared that they are going to go on a strike. So this could be interesting because a strike by the very powerful union can actually cripple the economy. So going forward, we all want to pay some attention to this strike that's ongoing effectively immediately. So this is the one thing that's hanging over the markets we have to be concerned with. Now, the other thing is, of course, the E-mini. We have the micro E-mini has actually punched beyond what I would thought to be a level of resistance. The top level was 4,560 and three-quarter. Market actually traded a lot higher in electronic trading at 4,566 even. So we have to see because the market has, like I said, already completed a three-wave rally. So this one more set of rally could actually basically change the viewpoint going forward. So we have to watch how this thing develops. If the market do take out this high here that I've mentioned, that I've highlighted here at 4,622 even, it could totally change the picture going forward. So do watch out for further rise in US equity markets. And the Nasdaq composite, we have the Nasdaq 100 index. We can see that Nasdaq now is currently trading at a high so far over the last 2 months since August at 15,719 and three-quarter. Although it is still within the allowable limits here because I have a top range here at 15,726 and three-quarter. However, if the market do take out the high here that we see here, let me see, I'm going to be more precise here at 15,916 and a half. Then obviously the picture will change from bearish to bullish. So do watch out for further rise in US equity markets. In Asia, we also see that Hong Kong has finally woken up, and we have seen price rally this morning. At midday, we have seen the price going up to 18,410 in the futures contract, and this is so far allowable because I have a bracket here at 18,318 to 18,572. We will see how, and if the market do take up 18,896, it will be likely to be retracing a three-wave rally towards a 19,271 to 19,517. So this is likely to be the path of resistance going forward. And in the Nikkei, we can see Nikkei is also rallying, and again, rally right now we are almost at the high for this couple of months. We can see the high so far is at 33,470 in the futures contract. This morning we have a high at 33,450. Now this is likely to take out this market here, so look out for a break above the 33,470 levels. And in the dollar itself, you can see dollar index has basically also reversed its loss that we've seen so far this week. We have a low last night at 104.20, and this morning we see the pump up in prices to 105.10 thereabout, largely on the back of a very strong retail sales and a raging inflation numbers on the back of a doubling of the PPI, which is the producer price index. Now the market believes that that will give the Federal Reserve even more ammunition to actually look at further rate hikes going forward. Although next week we're going to have the FOMC meeting for September. Market expectation is that the Federal Reserve will hold still, not making any move. However, that could change very, very quickly, like what we saw overnight in the European Central Bank, which raised their rates to a all-time high since the euro actually started trading. And their interest rate right now is at 4%. Like I say, this is the highest it ever been since the creation of the single currency. So this is an acknowledgement that inflation is still a big problem in the European theater. So this could actually prompt the Federal Reserve to change its mind about not hiking this month. Okay, so we will have to watch this development. Anyway, it's going to be next week, so watch out for the statement going to be released by the Fed chairman on September 20th. And over in the euro dollar, we can see euro dollar has come off on the back, despite the European Central Bank hiking interest rate to 4%. The euro actually tanks, and this is obviously, like I say, an acknowledgement of a problem which looks to be rather sticky. And this is also giving us the idea that the ECB President Christian Lagarde said that this could be the last rate hike for the year. So that means if the market do not expect any more rate hike, there's no incentive to hold on to long euro dollars. So basically, this is the move behind yesterday's big move to the downside. Now market is at 106.32, which is just marginally below the May low of 106.50. And if we do close a bit higher beyond this, that will cause the market to have a technical reversal. So do watch out for a reversal going into next week. In the sterling itself, sterling has also come off on the back of a weaker euro. The low traded overnight was 123.96. This is not far away from my target range of 123.45 to as low as 122.75. So it looks like there's going to be a little bit more room to the downside in the sterling going forward. In the Aussie has a very nice rally today. We have a 3-wave rally, and now we are at the point if it breaks the 65 cents, it's likely to go above the 65 0.6522, likely to go into 0.6530 to 0.6565 levels. This could be an area of equality, so look out for some kind of move towards this bracket of prices. Now, dollar yen, despite the dollar being soft, has been very resilient. It is stronger against the yen. And the high traded so far this week is 147.75. Currently, it's trading at 147.5 level. It is still possible that we can see a dip back into this area of 145.77 to 145.30. So a simple pullback will bring the price back into this bracket of prices. And what happened next could be another move to the upside. And over in the dollar Canadian, unlike what we see in the dollar yen, which is basically very, very firm, the dollar behaved very differently against the Canadian dollars. You can see the dollars has actually come off on the back of stronger oil prices, and low traded overnight is 134.90, and this is basically on the back of rising energy prices in crude oil. Now, as we can see, the crude oil prices, crude oil has already punched through the $91. It's currently trading at $91.15 in the NYMEX crude futures. We can see that the price is already within this bracket of prices at $92 to $93.74. So this is the area of vulnerability, in my opinion. If the market goes any much higher into $92, it will start to look very attractive to go counter trend. So that is something we can look forward to. In the meantime, you can see that gold prices has also rebounded off yesterday low at 1900. So 1900 has held out very, very well again. So now the market is trading at 1,915. So if you do see any pullback, that could be a buying opportunity. So do look out for any kind of pullback later on in the day. And obviously the silver is even more robust. Market did not take out the $22.22, and the low traded was $22.30 overnight, and we can see that the price has already rebounded. If we do get a price dip back into the 50% mark, ideally about $22.60, that could be another area in which to consider going long on precious metals in silver. Now, Bitcoin obviously is catching on to the return to risky assets. We can see the Bitcoin from just under 25,000, now it's currently at 26,874 this morning. And if we do get a 50% pullback to 26,000 thereabout, that could be a buying opportunity. There is no major news in the market, but again, we will never know unless the SEC, which is the Security Exchange Commission, decided to approve any of the ETF application, which there are currently 7 on the pipeline. Any one of them get approval, that is going to be lighting a fire under Bitcoin. So do watch out for any development there. And in the meantime, you take care, and I will see you again next week on Monday. In the meantime, you take care. Have a great weekend ahead. Bye-bye.